And if we go back on over here, let's first enter an invoice again. So let's go ahead and just enter an invoice, and then we'll receive the payment on the invoice. So let's say this is going to be customer 1 again, and I'm going to have to add the customer because I refreshed the screen. So I'm going to say save it. Now I could send this to them in an email, and depending on what kind of payment processes we have them set up, we can suggest to them ways to pay us, right? With a credit card, with a possibly banking through a QuickBooks or something like that in their actual bank, or with electronic transfer, or the PayPal or Stripe or something like that, or send us a check, whatever it may be. And then we're going to say that we have the customer, the terms, we'll keep it on 1/6. Therefore, it's going to be due on 2/5. And let's say that we're just going to make it a service item. The inventory is not going to be really important for us at this point in time, because that's going to be recorded at this point when we make the invoice, but not when we receive the payment, which is our point of focus this time. I'm going to make it a service item, therefore, and let's say it's going to be for the good old sales price, $100. Service item 1. Boom. And let's say sales tax. Let's get rid of the sales tax. Let's say it's not subject to sales tax. All right, make it nice and easy. Save it, and boom. Okay, so now we're going to say, let's say 2 of those again. So they're going to pay us $200. What's this going to do? It's an invoice. It's going to increase the accounts receivable by 200. The other side's going to go to revenue by 200, driven by the item, which we said was going to go to the service revenue account. Let's record it and check it out. We're going to save it and close it. Save it and close it. And then if I go to my balance sheet, run it, as we saw in the prior presentation, we should see this increase in accounts receivable. So if I go into that, there it is. There's our invoice for $200. I'm going to go back and then go to the income statement, run it, and we should see an increase to revenue. There it is, increase to revenue. That makes sense. If I look at that in Excel, just to see it in a more transparent format here, receivables went up by 200, and then income went up by 200. So receivables up by 200, income goes up by 200. No cash has been received, even though we've got an increase in the income, which increased net income. We're gonna have to track the receivable in a subledger for that $200 by customer. Typically, we do that internally. So if I go back to my report, I'm going to go back to the first tab, and then we track this in the sales tab, which would be, you might call the customer center. Within the invoices here, we're going to have the amount not due yet. We'll pick up those items. And where's the one that I just entered? There's customer number 1, where we could say we receive the payment. So when we get the payment, if it was a physical check or if it was an electronic transfer or so on, we might get the payment here, and then we can record the received payment. Now, just to point out, it's possible that we wait till something clears the bank, right? If it clears the bank, I can go up here and say, let's go into the transactions tab. And that's going to bring in the banking transactions. If we had a deposit and our idea was we'll wait till it clears the bank. Here's like a payment over here, for example. And notice it thinks it's found a match to this one, which might be the invoice that we just made. So then I can go into this one, and notice it's categorizing as a match. So it's trying to basically tie this thing out to an invoice. So, and it's invoice number 1080 that we just entered on 1/6/25, right? So if I was to record this as a match, then it's going to automatically record the received payment, possibly to put it into the checking account, or possibly then record the deposit as well and record that transaction. So that's one way that we might be able to set things up. However, you got to be really careful with that, because the only thing the system really knows to match it out is the dollar amount and the date. And so it's not, it might mess up. It might miss the match, right? So, or if you're in a system where, again, you're using some kind of intermediary platform, you might not be able to do that because it's going to go through PayPal or a credit card company or something like that. So in which case you might have to record the receive payment forms as you basically receive the payments. So let's do that. Let's go over here and go back to the sales tab. Now, if I got the invoice, I could find it here in the invoices. I could also go into customers and look at the open invoices. So open invoices and credits. And then in customer number 1, there it is. Let's go into customer number 1. And let's say we receive the payment. So there's our invoice.